Welcome back. Well, M&M results have just been declared. It has been a mixed bag actually. If you look at margins are above, revenues are in line. The stock has rallied quite a lot. Mitul Shah and Gaurang Shah are joining us to help us analyze the numbers. Mitul, how will you rate the numbers in comparison to, say, what the street was factoring in and the stock had run up quite a lot?
Numbers are very strong and it is much higher than expectation on all the parameters. Revenue is also slightly higher, but EBITDA margin coming in at 17% in a quarter, which is challenging, wherein your automotive segment already reported a decline. Despite that, company recorded 17% EBITDA margin compared to last year's 14.8%. Is reasonably strong, and it is primarily coming from the higher tractor sales. Tractor segment reported 20% YOY volume growth, and as we all know, in line with the escorts results and all other companies, farm equipment segment is a very high margin segment, and fortunately companies have a decent pricing power to pass on the cost escalation, so margins are reasonably strong. We believe that going forward also this tractor segment will continue to get positive traction and stock should perform well.
Gaurang, how do you look at the stock at this valuations compared to the kind of results they have declared?
So two things, Ajay. One is, of course, the stock has run up like you were mentioning just a while back. Secondly, if you have to look at the backdrop of the last couple of quarters and the numbers, then I don't think there's going to be any major disappointment. Of course, there's not much that I have in terms of the numbers in front of me. But given the valuation wise, if you want to buy afresh, I think it will be a better strategy to buy on dip. As a disclosure, we do have a positive coverage on M&M from a long-term point of view. And coming financial year, expect tractor sales and commercial vehicle to contribute to a certain extent. And not to forget, they have planned up a couple of new launches as well as old launches in new avatar. Old models, whatever they have in new avatar. So expect the positivity to come on month-on-month numbers, especially from tractor and commercial vehicle business, given that you have scrappage policy also getting implemented over the next couple of quarters.
Mitul, how much of the commentary, the great commentary and the kind of strong performance is already built into the stock, or you think the risk reward is attractive even from here?
Of the positive what happened during particularly Q2 and Q3 in terms of volume as well as financial performance are factored in. Now going forward, people has a doubt in terms of whether this kind of a growth for tractor will continue or whether company would lose the market share in the SUV segment or not. So on those front, I would like to mention that inventory level in the tractor industry wide is still roughly 15 to 20% lower than the normal level. Moreover, company is very strong in south and west with a market share of around 55 to 58% compared to all over India, company has a 39% market share. These two geographies are expected to report a very strong growth over next 6 to 8 months. So there is a high probability company would regain the lost market share and probably outperform the tractor industry itself. With this, definitely we can expect better margins and better profitability going forward, which is not getting captured in the current price, and therefore we believe that stock should perform well going forward also.
Right. All right, Gaurang and Mitul, we'll let you go on that one. Thanks so much for chatting with us about M&M. That was M&M for you. But another stock which is in focus and is kind of triggering a big move in other PSU banks as well is SBI. My colleague Jay